Thank you for joining us. You write in your notes about the relative resilience of these equity markets. When does resilience become complacency?
So when it comes to asset allocation, if we're complacent about stagflation risks, I think it's as simple as that. It's sort of heartening, and in a roundabout way this time around, central banks are very proactive. So this week we're sort of on watch who's going to come in with a surprise hike or warn of a surprise hike, barring the RBA overnight, for example. So that is in some part to defend against stagflation. But on the other hand, if you're going to tighten financial conditions quite aggressively right now, isn't that negative for equities as well? So is it going to be some short-term pain for medium to longer-term gain? I think then that's where getting that balance right is where perhaps markets can be a bit.
Do you think it makes sense to, in some sense, look through inflation and look towards the growth hits?
Short term, yes. I think, if anything, the dampening effect of growth, which had already been on, let's say, a different stage in the cycle compared to 2022, 2023, that has already helped to offset some of the forward inflation risk that we're risking, from the supply issues right now. So it's also important for those hawkishly leaned and central bankers to not go overboard.
So you say we're moving from phase one, where oil was in the driver's seat, to phase two, where central banks and the policy response in the driver's seat. What does that look like for markets?
So for markets, it's financial conditions, and it's always after the fact. So when do financial conditions tighten a bit too much relative to where we are in the cycle? And that brings back some other issues, such as valuations, such as credit, private credit, for example. I think that's always lurking in the background because it's something we're concerned about in the first place.
OK. Yeah. So do you see contagion risk there?
So right now, no, because I think central banks, they're very, very careful in calibrating, what's going to take place in the short term. So our view for central banks, especially in Europe, and also the Fed and the BOC, is try to sound as hawkish as possible without being hawkish or without actually tightening rates. So that's going to be the balance. I'm curious who's going to be, especially in the Governing Council for the ECB, are there going to be some sneaky, one or two...
yeah, I was going to say, does that apply to the ECB as well?
I think more so for the ECB, compared to all the other central banks in Europe at this point. And also, going back to the Bank of England, will there be any flips on those votes for a cut going back to a hold-em, for example? But I think for the ECB, that's where, if you just listen to the language, talking about vigilance, that was Trichet's code for a hike, right? We've had both Bundesbank, the German Governing Council members, talk about that. So I think that's where maybe you have a bit of a marginal risk.
But that's hard to do, isn't it? You've already had so much hawkishness from the Governing Council. You've got so much hawkishness expected from the markets when pricing for the ECB. How does Lagarde pull that off?
Right, so I think she's going to be asked, A, was it unanimous? And B, will the next two decisions, especially heading into the June decision, markets pricing the June decision as almost a done deal for a hike, as the next ECB decision going to be a live meeting. So I think that's where, so maybe the opening, so the statement's going to be as hawkish as possible, but then in terms of communication at the press conference, she's going to try to walk things back. Nothing's done deal. Yeah.
Nothing's a done deal when it comes to the ECB and the rhetoric coming through from Christine Lagarde. When it comes to the BOE, there's clearly a risk from central bank governors that they underestimate the inflation impacts and they don't want to repeat what happened, of course, during COVID and the pain that came through as a result of that. But there's also a risk that you just exacerbate a weakening economy. Where is the BOE closer to making a policy make on one side or the other?
So I think how fiscal plays into this is going to be very important.
Do we have any fiscal?
Is there room for fiscal debt?
53 million. I think that was the number yesterday for the heating oil support.
Hardly the bazooka.
So hardly a bazooka. I think when the energy price guarantee in 2022, the initial estimate was about £60 billion, right? So we're chalk and cheese here, right? So that's where... if I go back to what the Banque de France governor mentioned, so France does not have the resources for an energy price guarantee for a price cap, but they've brought in a short-term fuel price cap anyway, I think in France, 15 to 30 euro cents for fuel prices. If it really goes well beyond that, and that would take, and we have to go back to geopolitics to see what the impact is, then it's going to be a bigger issue. But I think central banks right now can be a bit more cautious. They don't need to go overboard because fiscal is a bit more limited right now.
I mean, we were talking about the political risk with Kim Crawford earlier. Surely in a moment like this, when you've just had the Greens winning a by-election, there's going to be so much pressure to do more and more and more to support people through a cost of living crisis. Right. If this war continues and oil continues to rise, the bond vigilantes are not going to be happy with the UK.
Actually, will be. I think the UK is in a, so more by accident rather than by design, in a better position because I just got an email about my energy prices for the next quarter, so they're lower actually. So the key date is actually going to be heading into the end of May, when we get the next price cap, how that's going to be calibrated. So where are European natural gas futures going to be heading towards mid-May, when the consultancies start to estimate the price cap as well. That's when inflation expectations really start to rise. So if, let's say, things normalise by May, I think the UK will have been in a better place. No headline impact on energy bills per se, but for Europe, it's going to be an individual country basis. But I think right now it seems like they're behaving a bit more responsibly, compared to 2022, 2023. But again, all depend on the situation.
Gilts relatively relaxed in the session today. Yields are actually down 1 basis point at the front end. Kim Crawford at JP Morgan again is a buyer at the front end when it comes to gilts. What is looking mispriced to you at this point?
So I think the mispricing right now is more in terms of the carry trade within FX. So we track based on our data. So if I look at the high yielding currencies in APAC, in Central Eastern Europe and the MENA region, and also in LATAM, there's only one currency right now that people are shorting, so they've gone underheld. That's Romania, and because rightfully so, real rates are very, very low there right now. I think inflation's heading towards like 9 handle or something, but headline rates are up 6. Everyone else has actually positive real rates. But it goes back to your point, real rates very high right now, heading into a potential supply shock and a growth shock. Will there be a temptation for actually central banks to pull back a bit from that and lower real rates? And that's when things are coming off. So I think where the mispricing is, can you afford to be almost limit long the carry trade still in this kind of a risk environment? That's what we're seeing in FX markets right now. LATAM is a bit more resilient, a bit more removed from this. That I get. But if I look at APAC, where the balance of payments risks are, if I look at EMEA, where, let's say, Hungary and Poland, where even before the crisis, the deficit targets for this year were heading towards 6%. That doesn't bode well for real rates. So I think that's where some risk-off may happen still.
And this week, with all the central banks making decisions, making commentary, who could surprise the market the most?
So I go back to the ECB, where there may be a few more votes for a hike. A lot of interest in the Swiss right now. So how are they going to try to manage this? On the one hand, people want to buy the Swiss franc. We've seen Euro Swiss run lower because of risk aversion, but they've allowed that to happen. On the other hand, you almost want a positive currency right now to limit the pass-through risk, from higher external energy prices. So markets right now looking for, will the S&P intervene? Are they going to up the ante on that? But actually, I think their tolerance for a stronger franc is going to be stronger than markets anticipate.
Okay, that's interesting. It's further upside maybe for the Swissy because they don't intervene because it benefits in terms of the inflation.
I still think the Swiss franc is going to be the best performing currency in Europe, full stop. Yes.
Swiss franc, best performing currency in Europe. Let's get your take on the BOJ and the yen. There's expectations from some that you get to 160, 165. Right. Do you have a clear view on this?
Go back to real rates. It seems like the markets still want to test that 160 level. Yes, rhetoric will pick up, but until there's, let's just say, strong action, you know what I mean, on the back of that, market's going to continue to push against that. I think one area where Takaichi has mellowed a bit is knowing the current situation, she can't push aggressively on the fiscal side, and there are other issues to consider right now. So if fiscal's going to be delayed, that was the big risk to real rates, and that might just support the yen to some extent.
Is it already a balance of payments crisis in Japan?
Not yet. I think we would need to see that on a more sustained basis. I think there's stronger resilience. I think Japan and Korea, both of them have about 250 days worth of reserves, so they can use that for the time being. If this is going to be extended, let's say towards year end, then it's a different story. It's very, again, same for Japan, Korea, and also for Europe, very different compared to the situation in 22 and 23. Yeah.
Jeff, always great to have you on. Jeff, BNY Senior Market Strategist, thank you very much. Well, let's take a look at the core six, shall we? How are they faring this morning? The likes of LVMH, Rheinmetall, ASML, all in the red this morning. But actually, we're seeing gains for Novo Nordisk, Schneider Electric and Nestle. Let's dive into some of the individual stocks on the move this morning with Charlie Wells. Charlie.
Good morning, Lizzie. So we've got some really interesting movers across the digital and real economy. So I've got some very different stories to tell compared to what we've been talking about a lot with, say, oil companies and transit companies. Let's start with Trustpilot. They are up some 14% this morning. This is that online review website. Now, they suffered a short attack last year. You'll remember that. But there was a lot of debate about this company. Do they have a competitor out there? Morgan Stanley researchers said they don't. So we're seeing a lot of strength strength here. They also delivered a very strong earnings report, so really up almost 16% now, so a lot of strength there. I said we were going to talk about digital companies. Let's bring up Viaplay. They are that Nordic streaming company, so again, streamers so in focus in the entertainment industry. There is news that some investors would like to take this company private, including Canal Plus, the French company, and some Czech investors. So they are up over, around 4%, hovering around 4% there, just indicating the importance that streaming has. And of course, I know a lot of people love those Nordic television shows. So again, really kind of getting a lot of positive momentum there. Staying in the green, but moving into that real economy, let's go to Wix. This is the British kind of home improvement company. They're up some 5%. They had a really strong earnings report today. And actually, they had some interesting commentary, right? Talking about how some of the wet weather that we've seen has been bad for their outdoor projects, but actually they've seen some strength inside. People doing some of this DIY inside, leading to a beat there and the market liking what it's hearing. Let's stay in that kind of British home space, the British home builder space, the British financing space, actually, I'm sorry, moving out of that, thinking to Close Brothers. So again, they had a really significant drop yesterday. They, were caught up in that kind of motor financing issue that we've been seeing here in the UK. We had a short report yesterday talking about how they might actually have to set aside more for that compensation in motor financing than people expected. Close Brothers pushed back. They have a report out this morning, an earnings report, talking about how they're going to make some job cuts. So down this morning, but again, not down as much as we saw yesterday, at least not at this point in early trading. And let's end with financing. We're in that financing space right now. Let's take a look at Commerzbank and UniCredit. Again, yesterday, we had that news of UniCredit's, renewed push to take over Commerzbank. But by the end of the day, we got commentary coming from the German government saying, hey, we, at least right now, like Commerzbank as an independent entity. And so this could be the market digesting some of that. Not a huge change here, but kind of dealing with this push-pull and the pushback from Germany.
Yes, the gains yesterday and a little bit of profit-taking maybe on the back of that, but the gains of around 8%, a little over 8% for Commerzbank yesterday. Charlie Wells, Charlie, thank you very much indeed on some of the stocks on the move. Anna Edwards, of course, has been sitting down with Peter all up to talk about that takeover bid. That was a really fascinating conversation. We'll play more of it through this show. I think worth reflecting again as we think about the banking space, what's happening in private credit, and a note put out by Morgan Stanley suggesting that private credit default rates could reach 8%. There is more to go in this story in terms of the AI disruption and what that does to the value of software names sitting in private credit.
It's interesting that you've seen this pause in that great rotation away from software stocks in the US, but not so much in the European space. But yeah, they're saying that while AI disruption has yet to impact private credit fundamentals in a material way, this elevated leverage, the looming maturity walls within software are going to have to mean that there is going to come a time when this pushes default rates back to near peak levels, at levels that we haven't seen since the pandemic. So the reminder of the cockroaches in private credit there from Morgan Stanley. But coming up on the programme, NVIDIA CEO Jensen Huang makes a $1 trillion forecast at its annual Product Expo, and we'll bring you all the details next. This is Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zapasaja in the Lesotho Highlands, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 18 minutes into today's session, and there's not much doing when it comes to European stocks this morning. We're pretty much treading water when it comes to the stock 600. The DAX is down about 0.25%. The CAC 40 in Paris is flat to the downside. The FTSE 100 is the one that's eking out gains. It is the reason for the risk-off mood elsewhere. It comes back to oil. Of course, we are higher again because of Iran attacking energy infrastructure. We now have Brent above $100 a barrel, $104 a barrel right now, and that cushioning the FTSE because of the exposure to energy names, Tom.
OK, let's get a take on what's happening in the tech space right now, because shares in Nvidia saw a bit of a pop yesterday in the session, a bit muted in terms of pre-market trading. Well, up 1.6% for a $4.4 trillion market cap company is not bad. That's after CEO Jensen Huang predicted $1 trillion in sales from its flagship AI processors. Huang also unveiled a variety of new products and plans to push deeper into central processing unit CPUs while addressing the company's biggest annual event, which continues today. Let's get more and bring in Bloomberg senior strategist Neil Campling. Neil, what stood out? Did you watch the full 2.5 hours? What stood out to you?
It didn't need to be 2.5 hours, to be honest. It could have been done in 30 minutes. But yeah, I think the key thing was the shock and awe of the pause before he said the $1 trillion. It made for great theatre and TV, to be honest. But the thing was, the consensus street numbers are almost there at 1 trillion through the next 2 years. So there was no massive upside surprise in terms of the big numbers that were given. So I think for investors, they'll focus more on what we hear from the CFO with the meeting with the analysts today that comes out later in California. So that will be a key focus. We heard some great things in terms of some of the new products. Their new Grok chip, which is basically 25% of data center chips expected going forward. And this is because they're facing new competition from AMD or from Google's called TPUs. Tech loves an acronym, of course. Yeah. And others in the space. They're trying to stay ahead of the competition. And of course, they have done so far. But whether they will going forward remains to be seen.
Okay, and you had loads of different partnerships and deals announced. What was most important for you?
Well, the interesting ones were the partnership with Uber, potentially on the robo-taxis, which is a technology that's been much promised for the last, in reality, 8 or 9 years. But we haven't yet got there, so that could be a key one, I think. Also, Samsung with the announcement of the new memory chipset, which was announced after hours, which gave a boost to that particular stock. And that's critical in terms of memory and the HBM that's required as a side for the technology. So I think that's a key partnership as well. And then actually some of the stocks that you think will be threatened didn't actually fall as much as you may have expected, such as Intel. You mentioned CPUs, for example, on the call, and that didn't really get hit. The stock closed flat in an uptake, but it wasn't like hit massively like some of the disruption we've seen inside the AI areas that we've seen in recent
That's just a really interesting relationship, isn't it? Because on one level, NVIDIA's competing, but they're also a shareholder now in Intel. They've invested, haven't they? So it's an interesting dynamic. You talk about memory, which is so important when we think about the broader ramifications of that demand for data center memory and what it all means for electronics and devices and prices, as we already think about inflation, of course. The chairman of SK, which is the parent company of SK Hynix, which makes this high bandwidth memory, has come out and said that we could be seeing these prices elevated into 2030.
Yeah, absolutely, and that's a key risk in terms of the inflationary risks of the AI, kind of the whole story around AI, but also in terms of when we saw from these Grok chips, for example, that were announced, they were saying they didn't require memory. So based on current projections that we could be in short supply for the next 3 to 4 years. Whether we actually get there or not remains to be seen, because memory, by its very nature, is highly cyclical within semiconductors. Triple-digit price gains that we've seen in this quarter in this space in terms of DRAM memory pricing, that's really unsustainable. So at some point in time, we're going to have to either reduce the expectations of growth in the whole AI complex, or something's got to give in terms of the demand-supply push-pull dynamics.
Neil, thanks for your analysis. Bloomberg senior strategist Neil Campling. Well, turning back to banking, of course, we were listening to the Commerzbank CEO Bettina Orlopp speaking to our very own Anna Edwards earlier. She says she didn't see UniCredit's €35 billion takeover bid coming.
It was a surprise to us, as to everybody else. The takeover offer, it was not pre-aligned, and more surprising, I would say, was then that this is an offer at a very low price if you compare it, for example, to our target price of €37. And it's apparently also not meant to take control. So that's surprising.
For more, we're joined by Bloomberg's EU finance team leader, Stephen Aarons. Good morning. So you heard all up there. She says there's been no contact with the bank about UniCredit's takeover bid, and it's a low offer. Where do we go from here?
Yeah, so I mean, it was a surprise to everyone. Really big news yesterday. A lowball offer, really. No one, including UniCredit, expects many investors to accept it. They don't want many investors to accept this offer. They just want to go past a 30%, which under German securities law would require them to make a mandatory bid. Once they pass that threshold, they can then buy shares as they wish on the open market. And so that's probably the plan that the UniCredit CEO, Andrea Ogel, is pursuing at the moment. And then hopefully, I guess for him, at some point, Commerzbank will come to the negotiation table and talk to him about if a deal is actually possible.
Stephen, Bettina Orlopp told Anna Edwards that she had not seen, the Commerzbank had not seen a detailed proposal, that UniCredit was not sitting down with them with a detailed proposal. Is that a fair characterization? And if not, why not?
So I guess it's a sort of fair description from her point of view. UniCredit has been pretty open that they want to buy Commerzbank. There are certain obstacles in the way, most notably the opposition by the German government, which is still a shareholder in Commerzbank. But what UniCredit CEO Ogel hasn't done is really put a very concrete plan on the table and say, these are the synergies I see, the revenue that we'll have together, and so on. So I guess from her point of view, the Commerzbank CEO's point of view, she can say, look, I haven't seen the proposal. Why should I sit down with you if I don't really know what you want? So clearly she's putting the ball in his court to say, put something on the table and I'll sit down with you, which makes it easier for her to say, you know, there's nothing to talk about and I'm not talking.
Stephen, thank you very much indeed with the latest in terms of that tussle between UniCredit and Commerzbank after we heard, of course, from the CEO of the German lender, Bloomberg's EU finance team leader, Stephen Aarons. Let's briefly check in on what's happening and take you back to the equity markets this Tuesday. So a little bit of softness, flat, in fact, across the benchmark stocks 600. The UK holding its head above water, up 0.2% on the FTSE 100. CAC current is largely unchanged. A little bit more pressure coming through on the DAX over in Germany. The DAX is down 0.2%. Utilities outperforming in terms of your sectors, up 1%. On the downside, tech off by 0.7%. Lizzie.
Yeah, we've got UniCredit shares down nearly 1% now. Commerzbank flat to the downside. But coming up right here on the opening trade, despite calls from President Trump, European foreign ministers say that they have no appetite to expand their existing naval operations into the Strait of Hormuz. We'll get back to the geopolitical story as we look at oil. Currently higher, above $100 a barrel. Brent now trading at 103, just shy of $104 a barrel, up 3.7%. Stay with us for more. This is Bloomberg.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrillon in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade. We're 30 minutes into today's session, and it's a pretty slow start here in Europe. The Stock 600 and the CAC 40 pretty flat this morning. The mood is risk off on both sides of the Atlantic. Futures pointing lower stateside as well because we have higher oil prices again. Iran stepping up its attacks on energy infrastructure in the Persian Gulf. Hence, we have Brent over about $103 a barrel. That pushing up the FTSE because of its exposure to energy names. We're up about 0.1% at the moment, but weakness for the DAX here, down 0.3%. Tom, what are you seeing under the hood?
So the disruption, the uncertainty continues in the Middle East, and of course you may have some investors waiting on the sidelines ahead of the central bank action of this week as well. In terms of the split, here's how things are shaping up this Tuesday then. You've got 230 stocks in positive territory. You've got what's happening in the energy space, of course. You've got utilities performing relatively well. On the downside, 345 stocks currently in negative territory. Volumes are lighter, though, in the session today, down 42% versus that 20-day average. Let's flip the board and have a look at the leaders in today's session. In the infrastructure and private equity space, you've got 3i Group coming through with some details in terms of results, interestingly, and planning to invest potentially 300 million euros to build out a majority stake in Lefdal Mine, which is a data centre as well, up 2.5% on that story. That's a very separate, idiosyncratic story to what's happening more broadly on the macro front. And in NL, as we think about the energy space, it's also coming through with some news in terms of damages and loss. It's looking for damages and loss of profits in an arbitration request it filed against Wari Energies, and that seems to potentially be supported, though it's arguably more about what's happening in the broader energy space. That currently up 1%. Talking of that uplift in terms of Brent prices, Shell gaining 1%. Just one example, of course, of the feed-through in terms of high oil prices and how that's benefiting at least those energy majors. On the downside, let's split the board and have a look. UniCredit, of course, we've been talking about that tussle in terms of Commerzbank versus UniCredit, of course, and we've been hearing from the CEO of Commerzbank. The German government has essentially said this takeover is not going to happen at this point. Commerzbank has said, show us a proposal, show us details. UniCredit currently down 1.2%. ASM International, this could be a supply chain story, falling 2.3%. International. Interesting, despite and in light of what we've been hearing from Jensen Huang and that demand that he still sees for those chips through 2027, $1 trillion, but that isn't benefiting that story and that narrative. ASM International lost, at least not in the session today. Richemont in the luxury space currently down 0.8%, also facing some downside pressure. Lizzie.
So not the best day for luxury. Well, here's what else you need to know this morning, Tom. The New York Times is reporting that the US has told Cuba that for meaningful progress to be made in negotiations, President Miguel Diaz-Canel must step down. The paper reports that officials are negotiating the future of the communist-ruled Caribbean island, and it comes after Cuba's power grid suffered a total collapse yesterday as the nation struggles with crumbling infrastructure and a de facto US oil blockade that's pushed the island to the brink. Elsewhere, the Wall Street Journal is reporting that the Securities and Exchange Commission, the SEC, is preparing a proposal to eliminate quarterly earnings requirements, giving the companies the option to report just twice a year. The Journal says the proposal could be published as soon as next month. The move likely to face opposition, however, from investors, but supporters saying that it could help to boost the number of public companies in the US. And US President Donald Trump is reiterating his appeals for other nations to help secure the Strait of Hormuz. This as the war continues to roil energy markets after Iran stepped up its attacks around the Persian Gulf, further hampering the outlook for global fuel supplies. Israel is also expanding its military presence across southern Lebanon, potentially creating a depopulated buffer zone as long as the threat from Iran-backed Hezbollah persists. Tom.
Let's get a perspective in terms of how the EU has been responding to the war against Iran, of course. The EU Foreign Affairs Chief says European ministers have what she called, quote, no appetite to extend their existing naval operations into the Straits of Hormuz. President Trump has called on other countries to escort tankers through the shipping lane, which has been effectively closed, of course, since the US and Israel attacked Iran. Kai Kallas said ministers rejected the idea of expanding current EU naval patrols from the Red Sea.
The discussion on whether we are, also extending this mandate to cover the Strait of Hormuz to go north from the Muscat line, there was no appetite from the member states to do that. As I said, this is nobody wants to go actively in this war, and of course everybody is concerned what will be the outcome.
Let's bring in Oliver Crook, Bloomberg's chief Europe correspondent, joining us from Brussels, who, of course, was attending that meeting as well, at least on the sidelines, and listening in and speaking to ministers. Ollie, President Trump wants a coalition now. Suddenly he likes coalitions, and he wants his allies to participate. It seems like the EU is not going to be playing that role, despite, as the Trump administration fairly points out, Europe's relative dependence on energy out of the Straits of Hormuz. What is the thinking in the halls of power in Brussels?
So there are two dimensions of this. The first is the EU naval mission that's already active in the sort of Red Sea. That was in response to the Houthi threat to the shipping lanes there. And it's a very small mission, we should say. It's about 3 naval vessels. There have been deliberations about potentially expanding the size, but expanding the remit to potentially send a political signal of some kind to President Trump to potentially be helpful in the Straits of Hormuz. But again, after deliberations among European foreign ministers yesterday here in Brussels, the answer to that question was no. The second dimension of this, of course, Tom, is the question of NATO activity within the Straits of Hormuz. If you asked on Friday, I think almost anybody in NATO whether or not this was a NATO responsibility, the answer would have been no. But then over the weekend, Trump posed the question very openly to NATO, basically threatening again American support for NATO if there is not some sort of coming to the aid by certain NATO members to the United States in the Straits of Hormuz. And again, the response to that appears to be no from NATO members. We should say that some of the people I've spoken to, particularly the Baltics, and we've heard comments from Poland and Finland, they tend to be more open and receptive to these sorts of ideas because they are very dependent on keeping the United States on side in NATO. But you talk to the other big players, whether it's the UK, whether it's France, and specifically Germany, who is really sort of an interesting case here. Germany has been standing most closely with Trump in terms of his activity in Iran. They have been sort of least in terms of objecting to it. That being said, we heard from the German defense minister yesterday, Boris Pistorius, saying that there would be no military participation by the Germans in any sort of way, that this is not their war. If NATO wanted to expand its remit to beyond the region, you'd need an international framework to do that, and you'd need, of course, consent from the German parliament. So that's a no across the board. I think for European leaders who will be having a summit here in Brussels on Thursday, they are now bracing for the possible consequences of defying Donald Trump. Of course, there have been some abstract threats, but that is certainly going to be in focus and certainly going to be a topic of conversations for those leaders when they assemble here on Thursday.
And of course, for Ollie, what matters for markets is the impact on inflation. It's also what matters to politicians. What progress has there been on EU efforts to curb energy price rises caused by the war?
So the war is obviously a huge concern from the European continent on a number of different issues. Longer term down the road, there's conversations about migration, but immediately there is the question of energy prices. Of course, not a huge number of the cargoes from the Middle East come to Europe at the moment, but of course they're much more dependent on LNG today than they were before the war with Russia, so they're very sensitive to these price spikes. I think that the people that I've spoken to, for the time being, they're considering this a sort of energy price shock, but not yet a crisis. I think there's a little bit of runway, potentially 2 months is the figure I've heard from a couple of people, where before this becomes a crisis. But for the time being, some of the measures that are being discussed, there are some at the member state level, so there are price caps on gas, on energy. You've seen a couple of countries roll that out. At the EU level, there's going to be discussions about potentially reducing taxes on electricity, grid costs on electricity as well. And of course, and I won't give you the sort of all the details and the ins and outs of the emissions trading system, but this is one of the things, a sort of EU mechanisms to put prices on carbon emissions is another thing that they're talking about tinkering with. The Italians want to put it fully on pause. Others do not want to. So that's going to be some of the issues, some of the debates that they have in terms of reducing energy prices. But Lizzie, I think the bigger conversation that this has prompted in Brussels was, again, these sort of comments from the Belgian Prime Minister over the weekend, who's openly calling for normalization with Russia to get back basically on those gas and oil supplies. He says that European leaders in private say that this is a good idea. They won't say it publicly. So this is something we're going to be pressing European leaders as they arrive here on Thursday.
Okay, Oliver Crook, our Chief Europe Correspondent for Bloomberg TV, thank you so much for the update. And speaking of that European reaction to this war, Finland's president says that NATO allies should take Donald Trump at his word when he ties the future of the alliance to actions taken to secure the Strait of Hormuz. Speaking to Bloomberg, Alexander Stubb also called for mediation to end the war.
I think we now need to de-escalate rather than escalate. So what we probably need is peace mediation. The actual original operation was not discussed with allies, but I'm sure that President Trump is now in conversation with the UK, with France, Germany, the big players.
I think President Trump said that NATO faces a very bad future if US allies fail to assist. How should we take that?
Well, I think, you know, we obviously have to take everything that the President of the United States says seriously. I think the key now is to focus on the alliance and what we do. We are a defensive alliance, which means that we don't do military attacks as such. We're 32 countries. Of course, after the Cold War, we had some peacekeeping missions, but they were always justified through international law and UN charters. So this is quite different from that.
Do you think the US should be helped?
I think those countries that have the capacity and the will to help the United States will do that and should do that. We have to understand that the situation, of course, in the Middle East and in the Gulf region right now is extremely serious. We have Iran that has attacked somewhere between 10 to 13 different countries with missiles and drones, and that's why I think any de-escalatory measure right now would be very useful. Iran's interest, though, the problem here is that Iran seems to have three interests. One is to cause damage to its neighbors. Two is to maximize the harm on the global economy through the oil price. And the third one is to keep up their current regime.
But how does this de-escalate? First of all, who are the right people or the right person to try and help?
Well, we need a ceasefire. So I'm just wondering whether the Europeans or actually India could get involved. We saw Foreign Minister Jaishankar calling for a ceasefire and negotiations just to calm down the temperature and freeze the situation as it is. The problem in these kinds of situations is when you kind of have three players, Israel, the US and Iran, all with more or less different interests. It's very difficult for them to organize themselves into a peace kind of a situation.
Finnish President Alexander Xauusd speaking with Bloomberg's Francine Lacqua. Coming up, more insights on the commodities impact of that war, of course, in Iran. Emily Ashford, Head of Energy Research at Standard Chartered, joining us with her analysis. Stay with us. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. I was traveling the business. But of course, after people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Welcome back to the Opening Trade. We are 45 minutes into today's session. European stocks up on the benchmark just by 0.1%. You're seeing a bit more strength here in the UK with the FTSE 100 up close to 0.3%. Energy, utilities giving a lift. They are the best performing sectors so far. On the downside, consumer is under pressure, down 0.7%. Tech also taking a bit of a hit, down 0.5. You can see the picture, of course, over in France. The CAC current up 0.2%. The DAX down 0.1. You're seeing industrials with defence names actually falling in the session today, interestingly. And that is the picture broadly across your equity space this Tuesday, Lizzie.
Of course, the geopolitics continue to dominate this morning, Tom. Iran stepping up attacks on energy infrastructure around the Persian Gulf. Operations were suspended at the Shah natural gas field in the UAE as officials assess damage from a fire set off by a drone attack. Standard Chartered has now raised oil price forecasts to reflect a prolonged disruption to the energy complex with a longer tail than previously expected. Joining us now is Emily Ashford, Head of Energy Research over at Standard. Good morning to you, Emily. So even if President Trump could persuade allies to help him supply naval escorts to get ships through the Strait of Hormuz, how much would that help to lower the oil price?
I think some of the mechanisms that the US has been trying to apply for the past couple of weeks have actually been successful in maybe metering the increases in prices that perhaps we expected to see. So the fact that we're trading uncomfortably between $100 and say $105 a barrel at the moment, I think shows that although some of those appear to have been met by the market with a shrug, they actually are slightly softening prices. And there's so many different mechanisms that we've seen being suggested by the US. US is clearly looking for an off-ramp in this conflict. So from some of the sanctions relief from Russian crude, talk of repealing the Jones Act, the IEA's release, and then a lot of the comments that we've seen just coming out of the Trump administration that have been downplaying the severity or potentially how long the conflict will go on for. Those are actually the two key questions that I'm being asked by clients. When does this end and how does it end?
Well, you say that they're downplaying the rhetoric, Emily, but you've also got the president saying that he could still strike oil infrastructure on Carg Island. I think it's 5 minutes' notice. If he does that, where does oil go?
That's one of the key questions. It would be at odds with what we think the Trump administration wants for oil prices. Is very aware of the cost and the trickle down from, say, an intangible crude oil price to a tangible gasoline price at the pump for the American consumers and the American voters. So everything that they've done so far has been effectively avoiding Iranian exports and the infrastructure in the Gulf there. Iran, conversely, has done the exact opposite. We have seen a huge scattershot approach of its attacks across the region, and it has started to not only target some of the transportation hubs, but look at some of the energy infrastructure over the past couple of days. So Iran is looking to escalate and really squeeze the conflict. It's it's trying to give a deterrence for this to happen again by showing that, yes, it can push prices significantly higher. Obviously, Iran said prepare for $200 a barrel. We're not there, but they're giving that threat that, yes, we are able to control something that is so acutely important to America and to the Trump administration right now.
Emily, and yet Brent is at 103, so it's up 3.4% in the session today. There will be some who are surprised that it's not higher than that, given what we've outlined in terms of the infrastructure attacks and what's happening in the Straits of Hormuz. Is Brent accurately pricing in the disruption right now?
Brent, I think, is also pricing in this enormous reserve release that's been announced, the largest ever. Reserve releases are often a double-edged sword because whilst they do over time add more product into the market, they also panic the market and it thinks that this is a situation grave enough to necessitate something that happens so rarely. So yes, we're pricing in the fact that there could be more barrels in the market, and the idea, I said, that the US is desperately looking for an off-ramp. I changed my price forecasts yesterday. I think you're going to see a whole suite of banks making adjustments to forecasts because whilst I tend to pride myself in not changing them very frequently, this is such an extraordinary 3 weeks in the energy market. And I actually changed them 2 weeks ago. But we'll see people, I think, starting to price in a longer lag, so a longer tail to any disruption. And then in the very long term, I think this has really exposed what we all knew, but it's really exposed how fragile the oil market is to these various choke points, and that the fact that we take comfort in, say, OPEC spare capacity, well, that spare capacity is very geographically concentrated, and I think it's really exposed that. So what I expect to see is prices elevated, perhaps maybe $10 a barrel higher than in pre-conflict forecasts for the next couple of years.
So you've shifted your forecast for 2026 to $85.50 per barrel from $70 a barrel. We're not getting demand destruction at that level, are we, Emily?
No, we're starting to see a little softening of demand, and we've definitely seen various countries, particularly those reliant on a lot of refined product imports, starting to curtail their exports. So Japan, Korea, for example, have been softening that. So yes, there'll be a little bit of demand adjustment, I think. But no, I don't think we're yet at the point where I would use, the true definition of demand destruction, in that it will never come back. What we have seen is obviously within the product space some really acute escalations in product prices, jet in particular. So I think it'll become very interesting to see how that plays out over the next couple of months. If we start seeing some of those refined product margins coming down a little bit, and refineries maybe dialing back some of their production, or using this as an opportunity to bring forward, say, maintenance periods, that is another mechanism that they can pull to maybe just see how this conflict plays out for the next couple of weeks.
Emily, we know how exposed Asia is to energy in the Middle East. We've seen the disruption, and we've also seen President Trump delaying his meeting with President Xi. Do you think that it's a secondary aim of the US presidents to hurt China via higher oil prices?
Well, China has been very strategically and opportunistically adding to its strategic reserves. It's been something that's been very important, actually, in maintaining global demand over the past couple of years. And this is the exact time, the exact reason when you start utilizing those reserves. So China is relatively insulated. Obviously, the majority of Iranian crude had two customers, India and China, and India is potentially the country more exposed to this. So China has a relative level of comfort that it's able to drawing down on those strategic reserves, which are opaque. We're not really sure how much is in them and what their actual capacity is. And I'm not sure how much information we will get from China as to when it does start to draw those down. But it's really India that I think is more exposed to this conflict. It's one of the reasons that we saw the initial sanctions relief for some of the Russian crude targeting the Indian refiners. Obviously, that's now been broadened to all countries, but India definitely the country I think most exposed, and conversely, Russia, the country that's benefiting from this conflict the most.
Emily, valuable insights. Emily Ashford, Head of Energy Research at Standard Chartered. Emily, thank you. Let's get another view on the broader markets right now and bring in Skylar Montgomery-Koning from our Bloomberg M Live team. Skylar, equity markets, are they still pricing in a relatively short conflict at this point? We're the third week in right now. Is this resilience we're seeing in the equity markets, complacency? What is your take on how equities are adjusting?
Yeah, I mean, I think it's absolutely complacency. I think, yes, we've had some big moves in some markets, but if you think about where we were coming from with markets in Asia in particular having very strong gains at the start of the year, if you look at a market like Korea, if you look at a market like Taiwan, we're still up significantly on this year. And I think that's also reflected, as your previous discussion alluded to, in the energy price market, right? So energy prices, they're very elevated right now as a reflection that the supply disruption is very serious. But if you look at the forward curve, it's priced to go to $80 a barrel by the end of this year. Consensus expectations are even more subdued in terms of you're still at $65 a barrel by the end of the year. Yes, some of that will be because forecasts haven't been updated, but I think because there is this bias within the market to look through geopolitical shocks, because more often than not that proves to be right, you're having a hesitancy now as well that proves to be complacency in the long term if the disruption continues.
To what extent do traders just sit back, hold their breath, until we hear from central bankers, more central bankers this week. We've been discussing throughout the show how hawkish can they be without actually hiking. Is that what they'll be waiting for?
Well, this is the struggle as well, right? We've already had an impact on central banks, right? The RBA hiked earlier today, and prior to the Iran conflict, they weren't expected to do anything at all at this meeting. So you're already seeing an impact on inflation persistence worries from a central bank perspective. Now, that in itself is negative for equities because you have higher yields triggered by inflation rather than growth as being very much a negative. And I think because of that, investors are looking for other ways to position. So there's been more activity in options, for example, than outright positioning within your kind of division of who's moving what. Leverage funds have moved out of euro, for example, very quickly, whereas your more real money is still quite exposed in a long perspective. So I think certainly you're waiting for a signal of what central banks and policymakers generally from a fiscal perspective to do to kind of recalibrate what you're thinking in the medium term.
And indeed, the Stock 600 pretty flat this morning, not doing much in the meantime. Skylar, thanks so much. That's Skylar Montgomery-Koenig from our Bloomberg MLive team. Well, we've got a big interview coming up in the next hour, in the next few minutes, in fact. Kathy Wood, ARK Invest CEO and CIO, will be joining Anna Edwards on The Pulse as we look at markets pointing lower, not just